Well, welcome back, everyone. It was another exciting day to kick off this week where the market's in a hole and we're heading into Jackson Hole. I'd like to start off by apologizing that I was having some technical difficulties this past Saturday, and the session that we had planned is being rescheduled, and I'm super excited about inviting you to it. But let's get started by looking at where this market has delivered price for today. The weekly chart is essential for bigger picture swing traders, and effectively for this week, for most traders overall. Why? Well, we know that we started to see selling into the back end of July. Last week, we got a TRP sell signal that came as we saw the fast speed line cross below the slow. And this did play out with a lot of that bullish momentum expunging itself. And we got a TRP red momentum dot or negative momentum shift. And that came in a bar before last week's TRP official sell signal. That's the cyan dot you can see above price. Now, what does this mean? Well, in today's market, especially after the dip we saw on Friday last week, where you can see the tail on that weekly candle, that's really mainly last Friday, well, is today's market a market that says the down is done? Well, we don't have a overturn of the weekly chart TRP signal, which leaves risk open to where? Well, target one's all the way down here. Now, I don't think we're necessarily headed there in a direct line, but there is risk to the rising support and resistance channel, and the top of the channel would be a fair area to say risk is still tilted down to it. Now, is that a more likely outcome directly into tomorrow and or this week? So let's go and explore that a little bit deeper by adding multiple time frames with the same indicative toolkit. We're going to look at the daily chart now. The daily chart's last sell signal came in back over here on the 2nd of August, and we can clearly see that prices slowed down in the support and resistance channel, but then ended up breaking, closing for 2 days below, attempted a move back into the channel, but failed and came back down. Now, last Friday, we made it beyond a midline target, very close to a target 2, and we continue to see the market tell us that it's not done, but a bounce had started. Where this is very clear is on the 4-hour chart. The sell signal, most recent, came in last week on the 15th, and we actually made it within a dime to 15 pennies, almost to precision of that target 2. The bounce happened on Friday, first 4-hour bar, second 4-hour bar, a little wobble today, didn't quite get down towards the bottom of last Friday's range, good, and we did see price action rise with the fast speed line crossing above the slow and a positive momentum dot. And you can see that in clarity looking at the 1-hour chart that created a lot of day trading fodder. The market is moving up into falling resistance. We're still in a downtrend, and we've got a counter trend bounce. The fact of the matter is we completed the sequence to get to a target 2 on a 4-hour chart that throws its signal out 3 to 5 days typically, probably a little closer into 3 in this type of a market. We got to the typical target area, which is the midline target on the daily, and we're still left with a sell signal on the weekly chart with a, of course, open target 1 way down here. Now, as mentioned, I don't think we're necessarily headed down there in a straight line. While the signal is on, we have to take seriously that downside risk exists, but it can be disrupted by a counter trend bounce. Now, do we know that this is going to take us significantly higher? It depends on the trader and the point of view, of course. The rise potential would be up to the top of the hourly chart channel, 440 and change, up to the bottom of the 4-hour channel, and that would be around $443 and change. And if we take a look at the daily chart, a rise that could take us up to the bottom of the channel, roughly 442 and change. And finally, a rise on the weekly chart that can take us to the fast speed line, around 441. So you can get a commonality between these numbers, and you can identify that somewhere between roughly 441 and 443 would be an area that we could see this bounce take us up, while we are on a counter trend bounce signal. Now, that doesn't happen to be a blue dot down here or a cyan dot on the 4-hour chart, neither on the daily. How do we know that it's still in force and has room to grow? The 4-hour chart price action is still telling us it has room to grow with the momentum dot and the fast speed line crossing above the slow, with price being above both, and that target 2 being met. It's quite typical for a pullback then to happen into the channel. Could be the bottom, center, unlikely to be above the top on the first pullback up to the channel. And the outcome at that point, signal dependent, could turn things more positive, but the base case expectation would be a pullback down again. Now, again, with signals at that time, we'll be able to get a much better sense of what that could look like. So one scenario is there. The other scenario would be, hey, this market has a counter-trend bounce in play today, which is left over from Friday's move, where we got a slingshot type effect on the first 4-hour bar. And as we moved up into the close on Friday, we actually sold down, as you can see. You can see all those red bars down over there. So I'm not looking at this as a wonderful, amazing, incredible opportunity that says blast off, up, up, and away. We sold down over here. That was the 1-hour bar there on Friday. You can kind of see that right at the end of the day. It was not significant. We were grinding, and then we didn't close at the highs. So to be very specific, I think that we're in a counter-trend bounce that still has some room to grow, but I don't think that it's necessarily something that I would want to swing overnight just as of yet on highly risky items. We are still in a downtrending market. So what does this culminate to? Using Rob's TRP toolkit, a market that is attempting to turn, that does not have a clean enough higher probability swing signal, that turns into being very careful and shorter term acting. Got to do some great live day trading in front of the room today, the active trader room. And what did that yield? Well, that yielded a very double down on the strategies. The strategies being, we had a buy signal on the hourly chart, speed lines crossed, and up we went into the channel. Closing in it gave us enough to say this market has got some teeth to it to keep that counter trend bounce going, but we don't want to fall in love with that up, up, and away until we've seen an official buy signal on a time frame that throws out a few days. Now that would be the 4-hour chart. Daily chart would be out to a week or more. We don't have those as of yet. Stay safe. I'm going to be showing you tomorrow live how the toolkit can help give me an idea on my own trading in terms of position size, in terms of duration, in terms of risk level. And I'm going to be drilling even deeper down with you tomorrow night at 7 p.m. to really get into how to scan for items that fit with the current market move, whether it be day or swing trading. And I'm super excited to share my knowledge with you. I'm looking very much forward to seeing you there. I'm going to get you that log in link. Well, actually, I'm going to get you that registration link. And mind you, if you had registered for the Saturday session, you're automatically enrolled for the Tuesday session tomorrow, starting at 7 p.m. Eastern Time. It's a do not miss session. Incredible, powerful strategies and techniques that can give us higher probability decisions and, of course, help identify trading candidates, both day and swing. I hope to make it very fruitful for you. I'm looking forward to seeing you there. Go to becomebettertrader.com/go, and off we go for incredible learning in exciting markets. Thanks for watching and have a wonderful rest of your day.